In today's video, I'm going to show you 3 stocks that could potentially and possibly pass your full-time income with $100 investment. But before we dive into this video, my free masterclass webinar returns this Friday, October 24th, 6 p.m. Eastern, 3 p.m. Pacific. Everybody who's ever attended my webinar in the past has said they learn more in the 1 hour with me than anywhere else. I'll be taking your questions. I'll have a Q&A. I'll be teaching you exactly how to understand the market, and I'll be showing you what you're doing wrong. Let me unveil the truth of the market to you. Everybody who has attended my previous webinars, they continue to attend and join Discord because of how powerful it is. I look forward to seeing you there. Spots are very limited. The last time we had to cut off and close the registrations, and hundreds of students, if not thousands, missed out. I look forward to seeing you. The link to register is below. Like I said, limited spots remain. I'll have a huge announcement there. I look forward to seeing you at the webinar this Friday. Let's change your trading game if you want to make the profits that you're seeing on the screen here. My students that join Discord are making $20,000, $30,000, $40,000, even $100,000 in their first month or two in the Discord. I look forward to seeing you at the webinar this Friday. The first stock we're looking at in today's video to add $100 into your portfolio is none other than Serve Robotics. Serve Robotics is a very strong company, a lot of potential going forward with the fact that they are going to have potentially 1,000 robots in the fleet on the street and operating by the end of this year, and it looks like they're going to achieve that goal. They're also partnered with Uber Eats in multiple cities across America, and they are expanding rapidly. So investing in this company would be a smart decision considering that it's grown exponentially over the past year and has not really pulled back too much. Shows the strength, the belief, and the confidence in this stock and the direction that they're headed. One thing I want to point out is Serve Robotics is also partnered with DoorDash. Shares of Serve Robotics popped on Thursday after the maker of the artificial intelligence-powered food delivery robots unveiled a multi-year partnership with DoorDash. Serve will work with DoorDash to expand its footprint across the U.S., starting in Los Angeles. Serve robots are already having a presence in the city as well as Miami, Dallas, Chicago, and Atlanta through existing partnership with Uber Eats. Serve says its machines have completed more than 100,000 deliveries to date. The agreement with DoorDash will expand the volume of orders available for delivery, the company added. Shares surged 24% to $17.05 on Thursday, snapping a 2-day losing streak and putting them on pace for the highest close since February 13th. According to the Dow Jones market, the stock has gained 26% this year compared with 14% gain for the S&P 500. DoorDash, meanwhile, was down 1.5%. The company unveiled its own autonomous delivery robots, Dot, last week. Serve has developed a reputation as an AI play due to the technology that powers its self-driving sidewalk delivery robots. The company was founded in 2017 as a division of Postmates, the food delivery service that was acquired by Uber Technologies in December 2020. Months after the transition, Serve was spun off to become an independent company. Serve has reported $642,000 in sales and delivered 120 robots for its second quarter. That was in line with analyst forecasts, though management's financial guidance for the third quarter came in weaker than expected. Serve Robotics is the future of food delivery, and it's highly likely that they're going to continue to grow at this rate. At the current price of $14.80, it's a pretty good buy. My AVP, which is what I teach with D-Stochastics RSI, my DFib, my proprietary strategies that I teach my students that I learned in hedge funds as well as years in the market, that I've combined all this dark pool data together with hedge fund strategies. I teach these to go over stocks. And so these tools show me where the stock is strong and weak and where it's likely to go based on dark pool data, my AVP, which is between $11 right now and $13.95. So basically we're right at the top of my AVP. It's a good buying opportunity. So what you want to do is if you're looking at putting 100 shares here, you'll wait to see if the stock goes up, maybe add 100 shares in a couple of weeks. If it drops, add another 100 shares. And if it comes down here, you add maybe another 100 here and 100 here. And this will give you like an average in here. And over the long haul, dollar cost averaging always wins. So essentially $100 a week into these stocks could surpass your full-time job. It could. It's possible. There's risks with every stock. However, if you invested in Serve Robotics when I first called it out back a little over a year and a half ago, when Serve was under $7, you would have already doubled your money. So 20 or 30,000 in would be another 20, 30,000 in profits already. This is how you make money in the stock market, dollar cost averaging. So let me show you how this works. If you put 100 here, 100 here, 100 here, 100 here, 100 here, and then you do a couple of hundred here, another 100 here. The stock comes back up. The average between all of this is somewhere right around here. So when the stock runs like this, let's say a year or two out, maybe sooner if they have a really big deal, then you're doubling your money because your average is way down here. You can't just buy the stock here and then just let it run. I mean, you can do that, but you want to consistently be putting money in because you want shares. 1,000 shares at 15 is better than 200 shares at 10 or at 9 or even at 8. You want to have a good average, but more shares the better. The number 2 stock that you want to look at potentially adding to your portfolio that could surpass your full-time income is none other than Navitas. I have already made $37,000 in 1 month on Navitas. There is the screenshot. I have 15,000 shares in my big account. This was just a small position in one of my smaller accounts, and I made $37,000 profit in just a little over a month. So when you think about that, I make half to a third of the annual average income for the household here in the United States, and I did it in 1 month. So these stocks can surpass your full-time job. There's proof. I mean, the annual income is between $60,000 to $100,000 in the Northeast, and I just made $37,000 in about 6 weeks, 5.5 to 6 weeks on Navitas. So it can surpass your full-time job. These stocks very well can do that, and I'm proving it with the screenshot I showed you, as well as my students are doing the same thing. In fact, my students have made tens of thousands of dollars every week on stocks like this and my other trades. So it's very easy to achieve as long as you're timing it right and as long as you're paying attention to the technical analysis, and I'm here to help you any way I can. So let's understand, why is Navitas so strong? Well, you have chip makers and server data centers, and you have NVIDIA, AMD, Taiwan Semi, SMCI, ASML, all these chip makers, Intel, of course. And everyone wants to make server chips, data center chips, especially like the Maxwell chips that NVIDIA make. They're the best of the best. However, there's a problem with server and data centers: heat, efficiency, and power draw. And Navitas's GAN and SIC solve these problems. In life, you want to find problems. Sometimes people in life, more than I'd rather admit, like to create problems just so they can create and sell a solution. Navitas is this solution with their 800-volt VDC, backed by NVIDIA, and they're partnered with NVIDIA, which no other chip manufacturer that has this type of proprietary tech can say. They're in a very niche market because they're supported by NVIDIA and backed by them and partnered by them, which means they have a real world shot at becoming the best in the business at what they do. Does that mean it'll happen for sure? No, but it's highly likely. And as long as they don't drop the ball and lose NVIDIA, this thing's probably going to keep going up, and they're going to keep doing better and likely to become more profitable. But remember, you don't want to put any more than 10% in any one sector or one stock. You want to be very safe. Navitas is definitely looking very promising. The stock has went from $5 just a few months back to over $17. When I got in was $6, and it's now at $17. This is a 300% return since I made the first video on Navitas. 300% in a few months. The stock market returns 8 to 12, maybe 16% per year. So this has already surpassed your full-time job. If you had put 50,000 in Navitas, you made 100 grand in 2 months. It's already done it. The passing your full-time job for income has already happened. Comment below how much money you've made on Navitas so far, or any of my trades for that matter. You've already passed the average full-time income or got very close just on Navitas alone. So here you can see Navitas on the charts. I called it out and entered most of my positions back here when it was $6. This was actually my entry back here near the end of September. So it's actually about 1 month I made $37,000, and a lot of my students made the same or more. And my big portfolio has 15,000 shares at $11 profit. So I'll show you guys the math on that. This is what I'm making in my big account. 15,000 shares times $11 as of right now, 165 grand. That surpasses average income. One stock has already done that. But what you'd be looking to do is dollar cost averaging. The stock has actually broken the previous support, which is right here. Break a structure, which is something else I teach in Discord and my students in coaching. And break a structure shows a new level of support. So the stock might come back down here and then do this number. That's scenario 1. Scenario 2 is it comes up, falls back down, goes back up again. And scenario 3 is that it breaks through, comes up, resists, comes back down, consolidates, could go lower, but it's unlikely. Right now, the price range is between 13 and 17. There's a lot of action in this area. So as long as they don't drop the ball, nothing bad happens, no black swan event or something really negative, then the stock is unlikely, very, very unlikely to go below $13 or $14. And I'll show you another reason why, more confluence. My DFib strategy is a hedge fund dark pool data strategy that I teach my students in Discord. We can see that the top line of the previous high right there. And if we draw it to this bottom most recent low, most recent high to most recent low, the stock pulled back to the 50% on the mark right there, 50%. That is the hedge fund number, 50%, where the stock is highly likely to rebound and go higher. And it did. When we use the confluence of a secondary Fibonacci, which is my DFib, which is what hedge funds do, I teach how to set this up properly in my Discord. We go to this most recent high right here and the most recent low, which is the 50% of the previous fib. When we do that, this pullback right here happened at 50%, and so did this one. Now, this one dropped to 23. If a stock rebounds 23 and breaks above 50 and holds, very likely to go higher, and it did, and it broke above the top of the previous high. This shows me that on the DFib, the confluence is exponential, very strong. No guarantees, of course, but very strong. We've got the 100 above the 200, the 50 above the 100, the 10 above the 20, and all in perfect bullish order. If we run another Fibonacci from the most recent high here and the most recent low, which would be right there, the pullback happened about 60%, 65%. It's very strong right now. But when we do this Fibonacci right here at the top line, and we do it the most recent low, which even if we did right around here, we would see that we're likely looking at a $15.30 price drop at worst case scenario. So I'd be wanting to sell put options at 15 or lower, maybe even 16, but this shows you where the stock is likely to go. You see, most recent high right there, recent high, recent low, and somewhere between 15.32 and the 38%, 14.79. So basically the $15 mark is now the support. So we could see something like this, but then something like this could happen. And that's exactly what would likely happen if it started to sell off a bit. So you want a dollar cost average. That's what you want to do. You want to add some shares here. If it drops down here, add a little bit more. If it starts to go down, add a little bit. Wait till it consolidates, add a little bit more. If you add here and it drops and you add some and it starts to go back up, add a little more. If it keeps going up, add a little more, then wait and hold and see what the stock does. But you can't beat dollar cost averaging plus time plus good stock. That's how you make money. I'm showing you how to dollar cost average. I'm showing you that it could take time, and it's very high probability this is going to be a barn burner of a stock. We can see by the Fibonacci, higher highs, higher lows, complete uptrend, as you guys can see. On the Fibonacci's, everything is lining up. This is technical analysis right here that shows you everything you need to see. We got break of structure. Right here, we got another break of structure. We have a change of character that happened right here. It came up, broke structure, and a change of character. So in reality, we've seen all the confluence that we would need to understand this stock is going to keep going up. The last stock to look at to add to your portfolio that could potentially surpass your full-time job is something I've talked about a lot on YouTube before. We've talked about Serve Robotics and robotic delivery, which uses chips. And chips, of course, are going to benefit from Navitas, especially servers and server data. However, none of this is going to matter if there is no servers or server space, which is where Applied Digital comes in. We've talked about Applied Digital a lot on this channel. However, I told my Discord to get in last summer when the stock was $5, and I got in originally when the stock was $4 and $5 as well. Now the stock is well into the $30 range. If you got into the stock back when I called it when it was $10, you have again made 300%. I want to recap this before we look at the stock and I show you guys exactly what I'm talking about. I called Serve Robotics at $4. It's now ran to over 17. I called Navitas at $5, $6, and $7. It's run to over 17. I called Applied Digital at 5, 8, 9, and 11, and again at 13, and it ran to over $37. My top 3 picks right here that could surpass your full-time job have already surpassed your full-time job. This has literally already happened because if you had put money into all 3 of these stocks when I first announced it, you have tripled and quadrupled your money already. And I have students that have made over $150,000 in the last 3 months just in these stocks, 50 grand into 150 grand, making 100,000 profit in a few months. this surpasses your full-time job. It's already happened. But I'm going to show you how you can continue to do this. Let's take a look at Applied Digital. They recently picked up an $8+ billion deal contract that runs over the next 5 to 10 years on server rental space. And not only that, they are building an entirely new space and factory in North Dakota for more server space. This is going to be huge. But let's look at Applied Digital. Looking at the chart on Applied Digital, I've done a lot of analyzing on this stock, and I've run my tools, my technical analysis, and the stock's AVP right now for me is between 22 and 27. So it's about $8 out of that range. I really would be looking between this range to buy. This is a really strong range and very unlikely that the bottom of this range, $20, would get broken. Realistically, my AVP would be somewhere like this. This is quick. It's a very quick estimate, but very accurate nonetheless. This is about the AVP right here. It was down here. It's moved up. I can do this really quickly by looking at the stock, the confluence, the higher lows, higher highs. Break of structure has happened right here. That's a crazy line. Break of structure right here. And then another break of structure right here. And then another break of structure up here. So we can clearly see that we're making higher highs, higher lows. See this right here? And then right here was a downward trend break of structure. Now the stock's working back up. However, right now a break of structure has happened, so we could see Applied Digital back at 29. Maybe we wait for that pullback, be a little bit cautious, see what happens right here. But if it breaks 38 or 40, then it's going to keep going. This is the range right here. This is the ceiling, and I'd be very cautious of this ceiling right now. But long term, you really can't go wrong. So this is the top. And if I go right in here, I will show you guys what's happening. A lot of sell-off happened here. So we can use that most recent candle and go right to the wick. And then we turn this red. This is basically a supply zone. All right, so there you go. We're in between this zone. The closer it gets to yellow, the closer it gets to 27, the more I'm buying. Like I said many times before, if you dollar cost average, it's very powerful. So if you buy a little bit here, more here, even more here, more and more here, and it, you're adding like this, your average becomes around 29. Plenty of room to grow. Remember, good stock plus time, dollar cost average, or dollar cost average time. Good stock, doesn't matter which way you organize it. Good stock, time, dollar cost average equals good profits. Now, there's no guarantee. And of course, nothing is 100%. There's risks with every investment. So you have to understand that. But this is a very, very strong company, and potentially this stock could be $40 plus by the end of the year, maybe even $50. Could be $100 by next summer. Realistically, I see 35 to 40 holding to the year, maybe a little higher, and I see potentially by summer or end of year next year, this stock being somewhere between 50 and 80. So there's a lot of room to grow on Applied Digital. 2-3 years from now, this stock could be $200 or $300. They supply server data. They have rental space. They supply the server data space and the data centers. They supply this. You can rent contractually in order to create server space. They are supplying it. This is huge. So as long as things keep going the way they're going and they become more and more profitable, like they should, keep getting these contracts, this stock could reach hundreds of dollars. It could. It very well could. You look at the market cap and we see it's 10 billion. Because of the demand for servers and server space, if they do even half of what they set out to do in 3 or 4 years from now, this is likely to be in the 50 to 100 billion market cap or higher. So there's a 5 to 10x potentially on the table here, maybe even more than that. This is a very niche market, very powerful position for Applied Digital to be in as long as they can execute on this strategy. Don't forget, if you want to make the profits you're seeing on the screen right here that my students are making, like Tempest AI, Snowflake, Oracle, Broadcom, Meta, AMD, the list goes on and on. Navitas, Applied Digital, Palantir, Snowflake, and of course, SoFi. I have students that are making hundreds of thousands of dollars on these trades. Even on Tempest AI, one student made over $100,000. Josh became a millionaire with Navitas and AMD making over 100 grand on each of these trades. If you want to learn what you're doing wrong in the market, let me unveil what is happening in the market and why it's rigged. My free masterclass webinar returns this Friday, October 24th, 6 p.m. Eastern, 3 p.m. Pacific. Every student that's ever attended my webinars in the past said they learned more from me in that 1 hour than anywhere else. In fact, I have a lot of return viewers at these webinars. Even my students are in the webinars because they absolutely love what I teach, and nothing is better than education. If you guys want to take control of your financial future, don't miss this webinar. Link to register is below. Very limited spots. Every time I host these webinars, we have to cut the registration off, and I have thousands and thousands of emails over the course of a few days asking me if it's too late, and they miss out and they can't get in. Make sure to register now. I will see you guys this Friday, October 24th, 6 p.m. Eastern, 3 p.m. Pacific time. I'll be answering a Q&A. I have a huge announcement. I'll be showing you guys what you're doing wrong. I look forward to seeing you there. One love. I'll see you in the Discord real soon, the webinar, and the next video. One love, fam.